Selling naked puts can make you rich. In the last 2 weeks, and I started this membership area, we made $8,850 just selling naked puts and short strangles. Let's see how much we keep. It's like a Thanksgiving update. It's only been 2 weeks for the trades, but most of those, 80% of those trades, will expire by December 20, most likely. Worthless if you took one, if you took 10, if you took none, if you just joined, if you're learning. Let's see how we did and where we are. So first trade, and again, this is just from the last 2 weeks. Check my channel, there's other trade ideas and all of that. Oracle, and of course link below to join. Oracle 160 put, this is what we sold. We collected, simple, $105. I sell naked puts 8 times the ATR. It's like ES futures and gold. I like to do short strangles. Sometimes I do jade lizards, and very rare I do iron condor or credit spread. I just don't like them. They just don't make enough money. I don't like them. It's super popular. It's too complex, and you just make so less money than just selling naked puts. Of course, money management, risk management is the key. Watch my other stuff. Oracle, we sold the 160 puts. Now, if it doesn't mention anything in brackets, it means number one, we sold for the monthly expiration of this month of December 20, okay, which is like 20 days from here. And two, it's one contract. You can do 10, you can do one. I do one because I like to keep my risk management at bay with about $20,000 max per stock ticker symbol. So let's start. We sold the 160 put Oracle, $105. We're gonna go to Tasty. This is Oracle. We're gonna go to trade. We're gonna pick December 20 right here. We're gonna pick 160 and see where it is. Right now, Oracle at 183. Price right now, 125. Okay, so nothing changed. Nothing changed. There's still 20 days. Theoretically, this option is worthless, but because there's 3 more weeks, then basically those 3 weeks is the theta decay that hasn't occurred just yet. We are at 124. I'm just gonna put it 124, so I'm minus $20. I'm down $20 theoretically now. Eventually, if all else is equal, if nothing changed, we are at 183. This is like, I don't know, 13% away from where we are now. There's 23 days to expiration. Theta decay is $9. Everything gonna accelerate in the last 21 days. This is just an example of showing you what's in the members area. I'm opening a school community, doing a Tasty Trade course tutorial for free, and this will also be around the paywall. But let's continue. Okay, so we haven't made money on this one. That's what you do. I trade small, I trade often. That's the Tasty Trade motto. Snowflake, look at this, $100 put. It's like 170 now. Collected 98. Let's go to Snow again. One contract, $100 put. You're risking theoretically $10,000, but the buying power was around 4,000, something like that. That's the key, probably even less. That's the key with Tasty Trade. The buying power is a lot less. Let's see, 100 put. Okay, so you're gonna go to Snow right here, Snowflake. You're gonna go to December. You're gonna pick 100 puts, and this is what we sold for $100, and now it's literally worthless, $1. Okay. There's not even a point of closing the trade, just let it go expire, worthless. But if you do want to close the trade, you see the buying power of $3,000 compared to Robinhood that would ask you to put $10,000 on the line. Now this was before earnings. For earnings, this was 130, and we sold, when I started this channel about 3 weeks ago, I did a trade on YouTube. The 90 put gave us like, I don't know, like another like $300 or something like that, I don't remember. And then we sold the 100 puts. The IV, the implied volatility, was crazy. So you made $100. You more than doubled your monthly fee if you are a paid member. Very good. That's it. Trade small, trade often, move on to the next. DK, Dick's Sporting Goods. We sold the 150 put. Same thing, same method. Collect $100. Now again, it depends on your margin, it depends on your size account, depends on all those stuff. The goal for me is portfolio margin, $175,000 on Tasty to apply, which means my leverage will go from 2 to 1 to 6.7 to 1. So if I have $200,000, I control about $1.25 million in buying power, not my own money. It's about extra $1 million in buying power to do those trades, and then I can really rock and roll. But if you're just starting out, you can just learn. You can maybe do no trades. You can learn and see the other trades, how it pans out. If you're so afraid of market crash and all that, which I am, it's natural to be afraid to lose all your money. Every month when the options expire, this month will be December 20, I'm buying puts on SPY. For the monthly next month, every month, I just buy one SPY put, 2 ATR, okay, not 8 ATR, 2 ATR on that. That's just my system that I built. That's it. 2 ATR SPY puts, one for every 50,000 that you have. If you're using a total of 100K, for example, I buy for that amount 2 puts on SPY, 2 ATR. And hope that it will expire worthless, because my other 10, 15, 20 trades will expire worthless as well, and all the income will be mine. That's the goal here. This is the insurance that I do, and every quarter I do. Only did it once. I need to do a video, a Black Swan hedge trade as well on SPY, just in case, every quarter. Let's continue. So Dick's Sporting Goods, we sold the 150 put for 102. Let's see what it does. DKS, okay, DKS right here, 213. We sold the 150, which is all those trades are 8 ATR, roughly 8 ATR. Depends on the premium. Sometimes it's 6, sometimes it's 7. But the point is to have 8 ATR sell so far out of the money and trade small. So if it does go 8 times the ATR, and if Dick's Sporting Goods go from 213 to 150, yeah, I'll be assigned 100 shares, $15,000 on the line. If it goes to 0, that's my max problem. If it goes to like 145 and I'll get assigned at 150, I'll just do covered calls. That's it. But the chance that the stock will drop 8 ATR, it's so slim that you collect so much money. And if it does happen, if all of them crashes to 8 ATR, let's say COVID happens or something around like mega event, you need to have an hedge, an edge also. Selling 8 times ATR is an edge, EDGE, but also hedge, HEDGE. You need to have a hedge portfolio. Puts on SPY, buying puts on SPY, doing a Black Swan trade every quarter on SPY. That's what I do. That's it. That's how I hedge my portfolio. And in the meantime, while those expire worthless and I lose money on my insurance trades, I make money selling naked puts 8 times the ATR. So let's go here again, 23 days to expiration. Let's go to the 150, 0 or 17 cents, because there's really no liquidity. No point of actually closing the trade. $4,500 in buying power instead of $15,000 in Robinhood. It's worth $17 now. Collected 100. It will expire worthless. Move on to the next one. Beautiful trade. That's it. JP Morgan, 225 puts, $103. Let's go to JP Morgan. Let's see the 225. It's at 250 now. You go to the 225 right here. It's worth, theoretically, it's worth 0, but because there's still time decay, it says that right now if you close the trades, you close it for 30. So if you wait 3 weeks, it will probably be zero. It will be 0 if it stays above 225. It's up to you. Again, this option is worth 0, but because there's 3 more weeks, there is a little time value for the option that will decay every day by about $3, $3 until it's zero. And that's it. And look at this, $6,750 in buying power compared to $22,500 on Robinhood. This is the key that I'm trying to convey. So again, this will also be worthless. KMX, CarMax, 65 puts, 2 contracts, collected $134. Let's go to KMX, okay, 65. Let's see where it is now, 84. It's like Carvana competitor, 84. I'm selling the 65, 2 contracts. You're on the hook. If it drops from 84 to 65, which is like, I don't know, 25% from here, you're on the hook for $13,000. Not on the hook because it's not worth zero. Then you can just cover calls against it, do the wheel. It's that simple. It is that simple, but you gotta focus on money management. Go here, go to the 65, do 2 quantity of 2, and it's about $50. Okay, we collected about 130. Okay, we collected 134. It's worth $50 now, and that's it. It's worth zero because it's not 65 now, but the time decay 3 weeks from now, this is what it gives us, 25 credit per contract, less than $4,000 in buying power to execute these 2 contracts instead of $13,000 on Robinhood. That's what I'm trying to say. This is the process that I'm trying to do every single day. Let's move on. We got Lululemon, 260 puts, collected 185. Again, you can do none, you can do all, you can do 1 a day, 1 a month, it's up to you. But this is the process that I'm trying to do. The process is the same. It's all about how much you have and the risk management, how many contracts you take per trade. Trade small, trade often is the mode of Tasty Trade that I try to follow, and I try to hedge with SPY puts and Black Swan events. That's it. Simple. Let's go to Lululemon, 260 puts. We collected 185. Let's see where we are now. 260 puts. You're gonna go to Lulu. Okay. You're gonna go to December 1, 250. We are now at 316. You go to the 250 or 260. What did we do? 260 puts right here. You think you're at the loss. Look at this. You think you're at the loss. It's now worth, I don't know, 213. We collected 185. So this trade is still open. Negative $20 on paper. Negative $20 on paper as of now. If it goes below 260 by expiration in 3 weeks, it's a different story. But again, 23 days to expiration, Theta is starting to going up. The last 3 weeks of the option life cycle, this Theta will go up and up and up and go crazy. $17, $16.92 every day right now. This option will lose $17 of its value, 89% probability of profit. If you're afraid that Lululemon will go below 260, close the trade, lose $20. Okay, you have this trade for about 10 days. It didn't do anything. Close the trade, remove the buying power back to your account, $9,000. But again, the more Theta decay, when the rapid Theta decay happens in the last 3 weeks of the option cycle, which starts in a few days, 21 days to expiration. Simple. Again, this option is worthless. The only reason that it's worth $200 is because there's 3 weeks to expiration. But 260 is about, I don't know, 20% from here, 15% from 316. That's it. That's that simple. Let's continue. Nvidia 120 puts. We collected 124. Let's see, we're in Nvidia right here. NVDA. Right here we got ourselves a price of 133. Down today we're gonna go here to the 120 puts. It's worth $100. Okay, there's still time. Now you gotta look at this buying power, $4,000 compared to $12,000 on Robinhood. Why in the world would I put $12,000 on the line to collect the same amount that I can collect with the third of the buying power with Tasty Trade. It doesn't make sense, but Robinhood is very popular on YouTube, and that's it. That's the reason. Selling naked puts, it's much more efficient if you use money management right, if you have hedges against your portfolio crash. That's it. Plain and simple. 133, the 120 is worth $100. We collected 124, still 3 weeks. Nothing changed. Avego, 140 puts, we collected 116. Let's go to Avego. Okay, 140 puts. We are now at 158. We did the 140 puts, which is right here. And it's worth 160. Okay, I did 2. Hold on. 140 puts. It's worth 163. And we collected 116. So you think, oh my God, I'm losing $50. Right now. You're losing $50 right now. Your buying power most likely changed from 4,000 to 4,200. But theoretically, if the option expires now, it's worthless. Because there's 3 more weeks and because the stock is down almost 4% today, implied volatility is a little higher. At the end of the day, it's 158. It's not 140. It needs to drop another 11-12%, something like that, in order for this to go below 140. And if it does, great. I want to own those shares because we took this trade around 170 or something. It was 180 like a month ago. If it drops to 140, yeah, I'll be happy to own 100 shares. If it doesn't, I'll collect my $100 and do this again for the next month, assuming implied volatility is in place and all that stuff. But for now, I just wait. I do nothing. And let's let the option and theta decay continue. Let's keep going. Nike 70 puts, $99. Let's see this one. Nike right here. NKE 70 puts again for December. Yep. Let's close this one. 70 puts, $65. $65. It's worth 0. Look at this. Nike is at 78 now. Is it 78? Will Nike drop 11% in the next 3 weeks? I don't know. Of course, it's possible. There's an 85% chance that it won't happen. Theta decay of $4. This really doesn't move much. Buying power, $2,000. How crazy is this? $2,000. We collected 100. Okay, it's worth 65. It's worth 0. It's worth 0. But we collected 65 for one contract. One contract. Let's say Nike drops another 10-11% from here to 69, something like that. You are on the hook for $7,000. Then you can just do covered calls, 75, whatever, collect even more income. Buying power of $2,000 compared to 7,000. That's unbelievable. You collect the same amount of income for a third of the buying power. And again, 3 weeks left. I let the time go by. Holidays, implied volatility is so low. It can continue like this, I don't know, until January when things picks up. And until then, the option value will go down and down and down. That's it. Simple as that. Let's continue. ES future. This is a short strangle. Again, I've done a couple of videos where I compare SPY to ES, where I like to sell ES futures compared to SPY. Everyone likes to sell SPY and put $50,000 on the line on Robinhood, which is absurd when you can do the same trade, make 5 times more the income, and with like 10 times less the buying power. Crazy. So we did ES 5,400, 6,400 strangle. What does it mean? It means that the ES futures, which is the futures of the SPY, it's a naked trade. It's a delta neutral strategy. You sell naked put 5,400, which is like 540 put on SPY, and simultaneously you sell the 6,400 call naked as well, which is 640. So your range is 540 to 640. Expiration, this is a little far. I did 100 days. February 28, collect 3,350. there's not a lot of time decay for those 3 months or trades. It's still early. I used to do 10 days to expiration. I still do, but it's a trade idea, so you can think about it. Let's see how it does. 540 and 640. So you're gonna go here. You're gonna go /ES right here, and you're gonna pick the February 28th right here. You're gonna scroll. You see here the price 6,000. It's like 600. Same thing, but the income is much better than just selling SPY as well. So I'm selling the 540, okay, 5,400 on the put side, and the 6,400 on the call side, and it's worth right now 3,100. We collect about the same. We collected about 3,350. So you're up 250 bucks. Again, there's a lot of time decay, but still, it doesn't, there's still time. Okay, that's the key here. 93 days to expiration. I just executed this like a week ago. $50 theta decay, $10,000 buying power. It was a little less. I've done a few trades since then, but it was about 8,000 when I took the trade, and that's it. And every day, theoretically, if nothing happens, this option should lose 50 bucks. Now, is my goal to make $3,000, wait until the last day? No. My goal is to collect about 1,000 and move on, and that's it. And give it like 2-3 weeks. If this drops below like 2,500, between 2,000 and 2,500, I close the trade, I move on. Simple as that. Make 1,000 bucks in 3 weeks. Get out. You see here delta neutral 0.06. That's it. That's it. My focus on those triangles is to be in and out in so less time and with a high theta decay. I'm not planning on holding this for 100 days. I'm planning to make 1,000 bucks, about 30% profit. Get out. Do this again. That's it. That's the plan. Is it ideal? I don't know. It's what I do. Sometimes, as I said, I do 10 DTE on MicroStrategy and on ES and gold and a few others. I need to do other videos, but not a lot, like 4 or 5 ticker symbols. Those two, ES, gold, MicroStrategy, and 2 others. Let's continue. So the other one is gold, 23 to 29. Same thing. You sell the 2,300 naked put. Simultaneously, you sell the 2,900 naked calls. This is a short strangle. Collect 2,300 for February 25. We're gonna go to gold /GC right here. We're gonna go to expiration February 25. We're gonna pick the 2,300 right here. Then the 300. This gave us a little scare because it went to 27. Now it's back to 26. That's why you do the 100 days. If you do this in 10 days time frame, yes, the theta decay will accelerate, but you could catch like a week of a 4 or 5% move that will can really hurt you. So you make less and you make it in longer time, but it's a little safer. Okay, if you understand my point. 23 on one side we sell, 29 on the call side we also sell. Let's see how much it gives us right now. Here, 900, and theoretically it's the same price, 2,310. We collected 2,300, literally the same price that it was a week ago. Nothing changed, but now the theta decay is 40 bucks. So if gold doesn't move, I'm waiting for days for the gold to do nothing. Waiting for golds to do nothing. This is a 0.6 move. If it doesn't move, and again, my goal with this trade after a week, it's the same price. This was 3,300 a few days ago. That was a negative $1,000 in my account, like in buying power, but I didn't close it. It has 100 days to expiration. It went back down to where I got it at 2,300. Buying power 7,500 affected. This is a delta neutral trade. 83% probability of profit. Theta decay 40 bucks a day. Now again, this goal for me, if it reaches anywhere between 1,000, right here, 1,000 and 1,500, about $800 profit. Hopefully in a month, in 30 days or less, I close the trade. and I start a new one for another 100 days. That's it. While I've dwelled with this for 10 days expiration, a 5% move in a week can really hurt your account. So that's why I switched for 100 days, basically. And that's the trade. I was down $1,000. This was 3,300 a few days ago, and it went back down to earth at 2,300. Now I'm waiting to go below 1,500 bucks, and then I'll close the trade around, I don't know, 1,200. I aim for this one again. 30% profit for my ES and gold futures, 100 days DTE. That's the plan. I used to do it every Monday, but now it didn't move much. I don't want to open another position. Again, it's up to you. You can open another position every week. It is up to you. For me, if I make $1,000 a month just on this, another $1,000 on the futures, and then I do it again, what's wrong with that? What's wrong with that? Let's move on. We got ourselves Chipotle, 55 puts, free contracts for January 17, collected $200. Let's see. 55 puts, CMG. Okay. Chipotle for January. See, I tried the December. There's no... All the trades moving forward in the members area will be for January, which is 51 days for expiration, because December has just no more meat on the bone. Again, Tasty says, trade, sell an option around 45 days to expiration, let it decay, and start managing and closing your trades around 21 days to expiration. That's it, because the most meat is between the 45 days to the 21 days. That's the most meat on the bone of an option. If N8 ATR, for me, to make it safer, as safe as option can be, money management, risk management, all that stuff. But there's no point of selling right now for December, 23 days to expiration, because all the meat is already gone between day 50 and day 20, give or take. So we're going to go here. We're going to go to Chipotle 62 already. We check the 55. We have 3 of those. And it's worth $120. And we collect about 200. Yeah. 3 contracts, we collected 200, you see, and this was like a week ago. It's already lost $80, it's worth 120 now. Theoretically, it's worth 0, but because there's more time, it is what it is. You just let time do its thing for you. The buying power affected is $5,000. Free contract is $16,000, 500 on the line. That's it. $16,000 on the line to do this cash secure puts on Robinhood. Get the same amount of money, or $5,000 on Tasty. So if you have 100K, I don't know, 20 trades. Don't do 20 trades because you need to save some money as cash just in case, for extra buying power, extra margin requirements, money for hedging, and all that stuff. But just in general, that's my point of view. Don't just go blindly and buy 100 contracts, sell 100 contracts to get paid. That's not, do whatever that you want. I just don't do that. That's all. Okay, so it's 120. We collected 200. You see, and it's only been a week. So if this goes, I don't know, below $50, I'll probably close it because it will have so much more time. If it's $50 in a week and there's like 40 something days to expiration, I'll close the trade and move on. That's it. Simple. Let's go on. FedEx 255 puts, collect 187. Okay, we're gonna go to FedEx. Then 55 put. I like this. Look at this. FedEx at $300. One. What we've done, I like this. I saw this on Tasty a few days ago. The IV jumped for some reason. I don't know why. Maybe there was an article about UPS or FedEx. I don't know. It doesn't matter. If the IVR jumped, extra percentage in the last 5 days. Options were super expensive. I took advantage. I sold the 255 put. I posted on the members area for members. You can join below. And that's it. And now it's the same price. It was around 300. It's still around 300. But the option price jumped. So if the option price jumped because of some volatility, some news, something, Tasty showed me that on their watch list. I took advantage. I showed this to members. This is the value of the members area. Basically, collect 187 bucks. Let's see how much it is now. We're gonna go to the 255. Yeah, and it's worth 130. Theoretically, it's worth absolutely zero. Okay, sure, they might have earnings or something like that before expiration, but now 255, it's 300. I want to own 100 shares of FedEx at 250, 255. I don't think I ever will. Maybe I will in the future, but right now it's 300. That's 15% from now to drop in 23 days. Okay, so you're up from 180 to 130, up 60 bucks. Great, but theoretically this option is worth nothing. Now that nothing will happen 3 weeks from now, assuming nothing will happen and it will not crash. And the theta decay will start building up at 11 bucks a day. Is good. Look at the buying power, 7,600 compared to $25,000 that you need to put on the line right now if you done this trade on Robinhood to get the same amount of money. Same amount of money. This is a Delta 7. Would you rather put $25,000 on the line, or would you rather put $7,000 on the line right now? And only if FedEx goes below 255 by expiration, then you will need to either close the trade at a loss or have $25,000 on your account to buy 100 shares and then do the wheel against it. It's up to you. It's up to you. And the next one, this was a beautiful one, MicroStrategy 250 put. Look at this income, 1,750. I did a YouTube video about this. Was like a few days ago. 250 put, 250. It was 400. Let's see, MicroStrategy, MSTR. It was 400. Now it's 387, up 10%. Every day it's go crazy. Look at this. The 250 put right now, 1,150. Okay, we collected 1,750. Now it's 1,150. $600 profit in, like, I don't know, from Friday, something like that. From Friday, today is Wednesday, like in like 3 trading days, barely 3 trading days. This option lost 600 bucks of its value. Why have I taken this trade? Because the theta decay was like 82 bucks. Go watch the video on my channel. It was 82 bucks theta decay. Now it's 70 bucks theta decay. It's literally worthless. If you and I'll be happy to own MicroStrategy 100 shares at 250 if it gets there. And if it doesn't, I'll collect like almost $1,800 in like 3 weeks. How crazy is this, with about $70 of the option losing its value every single day? It's actually lost 600 bucks, so it lost like, I don't know, $200 per trading days in like 3 trading days or something like that. 1,130. Am I closing this trade? No. I will close this trade when it's like, I don't know, below 100. I want to collect the entire amount of income. There's 23 days to expiration. I don't see MicroStrategy go to 250, especially when it's up 10% today. If it just does nothing for like a week, this option will drop from 1,100 below 500, and then it will decay and accelerate. Just let Mother Time do its thing. That's it. That's the money. Now, all of those total makes about 8,850. Of course, all of them are still open. Of course, the ES and GC are still open for 100 days. The goal is not to collect the entire amount of income. The goal is to collect 70 to 80%. 80% is my goal. Depends on the trade. For the short strangles, I try to collect 30%, about $1,000 in here, $1,000 in here. It depends on the trade as well. MicroStrategy, I'm gonna collect like, I don't know, I'll let it expire worthless, probably, and collect the entire. That's people's rent. You do this once a month, get paid $1,800, pay rent. You know, something like that. Depends where you live. All the rest, there's a, I would say, 99% chance that they will all expire worthless, all of them. And if not, yeah, maybe I'll buy 100 shares of Nvidia at 120 because it's 133 now. Who knows? But all the rest will expire most likely worthless. That's it. That's the plan. This is how I do it. We only started this like 2 weeks ago. I'm building a school community. For now, you can just get the trade ideas. And I haven't done any trade since. This is like 3-4 days ago. I haven't done anything because the IV is so low. Implied volatility is so low. We're entering a holiday weekend. There's no volatility, and if there's no volatility, there's not a lot of trade ideas. And if there's no trade ideas, I prefer to sit on cash and not just buy something with low IVR, so my risk to reward ratio is not worth it. Okay, that's also something to consider. How much you're risking compared to how much you are getting a reward. That's the bottom line. I'll see you next time. Subscribe.